We're now going to delve a little bit into dry bulk shipping. And we have our moderator is Mr. John Su, who is the group chairman and CEO of Erasmus Shipinvest group. John's come over from Greece. We have Michael Fenger, Chief Commercial Officer of Norvic Shipping Middle East. We have Nitin Mehta, who is Group Chief Operating Officer of Lila Global. And we have Numair, Shaikh, Chief Executive Officer of Tomini Group. So, John, please.
Thank you very much, Kevin, for your introduction. A very good morning to everyone. Sorry for my throat and voice because I'm still trying to get recovered from a cold that I caught during my trips. But very, very much honored to be here. My name is John Su from Erasmus Shipinvest Group, the company that I set up about 15 years ago. Started from Athens originally, and we are also a little bit spread around the world at the moment. And myself, I have been many times in Marine Money and many times in Dubai, but honestly, first time in Marine Money Dubai. So thank you very much for sharing a very, very precious moment. And Kevin and Mia give us only half an hour for such a fascinating dry bulk discussion, but thanks to all our distinguished guests together and also the very, very renewable, distinguished fellow speakers in the panel, we try to contribute the best as we can. I think Kevin also very, very briefly introduced our panel already. And three of them, I think, is really very, very representative shipping expert, especially based in Dubai. So Michael also, as a side note, we just graduated together from the same class in CBS, Copenhagen Business School, for a Blue Board leadership program that we just finished. So it's a kind of good continuation here. And of course, it's very much many years in dry bulk operating domain, and also the other fellow friends, Nitin from Lila Global, has very, very much established dry bulk owner, very, very dynamic recently. And also Murad as the principal and the CEO of a very, very renewable and long existing dry bulk owner, Tomini Group, is all, I believe, also a very good contributor to our panel. So what we heard from this morning, the big picture, I think, on the dry bulk is that something that we have very much unprecedented seen so far. And certainly, after COVID finished, we have seen a very much special moment that geopolitically, the challenges we have ever seen since many decades. So that's why, in some sense, Dubai also becoming very special, very much something that we all talk about globally as a very important center for shipping now. So also, on the other hand, we have seen the global economy in certain big countries are not getting back as we expected with post-COVID period. So on the other hand, certain countries like Japan, Dubai, Singapore, for example, we have also seen a very bullish scene on both stock market and also real estate, etc. So I think there's always challenges and opportunities also coming from regulations, innovations, and all these kind of new things that we have seen in the past. So on the dry bulk, back to the point, I think that last night, what I have seen on BDI closed at 2,291 points. Honestly, this is a figure that is not that very much dramatically attractive comparing with historic levels. But on the other hand, the sentiment in the market is very bullish, very firm. So we have seen people really very strongly believe that the market will stay longer and firmer. So for many reasons, of course. To that point, I would like to start with that, with the panel fellows. How you think that this year, BDI, what would be the highest level you think? What's the reason behind? Michael, if you could start with.
Thank you, John, and just start a little bit elsewhere, just to introduce Norvic Shipping. We are dry bulk operators. We're running about 130 vessels at the moment, mainly from handy through super ultras up to Kamsamaxes. We trade globally. We have 11 offices scattered around the world. And the reason why I want to start there is because, as John said, you know, we have a very bullish scenario at the moment, and it's great from an owner's point of view, of course. From an operator's point of view, we have to live on the highs and the lows, and as you can see, a lot of the traditional dry bulk owners comes out with great results as well for 2023, and I think that everybody was sort of surprised by the strong end to the year, and also to the very firm start of 2024. And when John asked about the BDI and it's not historical. His historical high, not historical either, but it is in a certain way because of the expectation, and we are still in Q1. So in that sense, it's extremely high, and I feel that John, you also touched upon that some economies maybe have been more slow in their growth after COVID. But then, if you take that into consideration with where we are today at the BDI, then it could be only a matter of time before they really get up in gear. And where do we end? That's the big question. For a company like Norvic being an operator, it's very much also what Mia actually started by saying here this morning. There's a lot of disruptions in the world. We see 2 canals, which is maybe not closed, but definitely has limited passings. We, of course, have the unfortunate situation in the Black Sea with a war, and we have seen a number of environmental sort of issues the last couple of years, and it seems to only grow. And just on a quick note, at the Davos meeting in January, everybody was asking a survey what they consider the biggest risk on a 2-year horizon and a 10-year horizon. On a 2-year horizon, environmental issues and weather phenomena was number 2. It was only topped by disinformation and false news, and that's because we have this massive elective year. And on 10 years, it was number 1. So what we're seeing is this issue, and as a operator, again, it has a bigger impact on our business than perhaps some of the tonnage providers that fix their vessels out on long-term time charter. So it's something that we have to build into our scenarios. For an operator like Norvic, we have to basically build on a 2-strategy scenario. We have a short term where we look at the grain harvest, we look at the Panama closure, we look at the Suez, and we look at all the disruption in the world. And then, of course, we have the long term as well, because we take vessels on long-term period, where we look at the old-fashioned shipping phenomenon, such as macroeconomics and order book and fleet age and these things. And I agree with John that it looks strong. The most tangible one is, of course, the order book for dry bulk, and also the yard capacity. So in that respect, it looks firm. I believe that it can go very high. I'm not going to go into more.
What point you think in your mind?
I mean, if you
5,000 or
no, I probably wouldn't put it up to that. But I see at least another, let's say, between 25-30% increase. But it's not going to be a steady increase. It's not going to be like that. We're going to have the volatility as we always have. But at a certain point, whether it's going to be Q2 or Q3, it's going to top what we're seeing now. Absolutely. So let me put 30% on the line.
Thanks.
I think that's quite bullish.
So we gave to Nitin, please.
Yeah, hi. Yes, I think your original question was where do I see the market and how progressive. Well, I am also optimistic as everybody else in this room, but perhaps not as optimistic as Michael is. But I hope you are right and I'm not. So for everybody's sake. On the, I think we can all get into reasons why it is where it is, because none of us expected. If last year same time you would ask me what I would expect the market to be this year at this time, I would have been very conservative and we have been way off. And of course, I can explain the reasons also. There's a CAGR of 8% expected. There is canals, there is Red Sea, there is added ton miles to ore business, etc. But when coming back to the main question, I think the market is high at one of, I think very close to the peak, if not at the peak. It is definitely not at the peak, because the market is strong, fundamentally strong, like Michael said. But from here, I won't say 30%, but yes, 10% odd. But we do believe that we're very close to a high. It cannot. Because there's an impact,
Sorry,
cost impact.
sorry, Nitin. So you mean 30% down, not up?
No, I don't say. I don't say. If I said 30% down, I won't be sitting on this chair. I'll be in office trying to repay my loans. No, I believe it's going to go high, but not as high as 30%. So I would say about 10%. I wanted to say 5, but looking at Michael, I'll say 10, 15.
I'll just say that the 30% is a peak, right? It's not a sustainable.
Yeah, peak, maybe I would agree with you there.
There you go.
I share slightly, you could call it bearish. I mean, if you look at the factors of where the market is today, I think there's a lot of factors which will slowly start to unwind, I do believe there's a peak to come. I think it'll be in the next month or 2 months, and then it will slowly start to unwind. If you think about the majority of the run is due to the Capes. That's because of demand for iron ore from China. There's a lot of congestion and weather-related delays that are affecting the market positively. You have the canals issue, which will start to unwind. Obviously, Panama Canal will start to unwind over the next 4 months. Suez Canal is a lot more anybody's guess. We obviously hope that it starts to improve in the conflict and the disruptions in the area. Even if that happens, we don't know how the Houthis will respond, if they will stop their current manifesto. But I think in general the market will stay elevated for the year. So I think we will have a positive market. I think we will be slightly better than last year. And this is due to primarily because economically speaking, fundamentally speaking, for the rest of the year, we expect ex-China to be in a stronger position. Interest rates should start to improve. China has a lot of capacity to improve and to shock and surprise people. And if that does happen, that will be very, very positive. I think people have already priced in that China will not be as big a factor as we usually hope it will be in the dry bulk market. I think that's a good thing, because last year China did not achieve as what we thought it would achieve. And so if we haven't priced it in, it can only be positive if they're able to push, do their stimulus packages and drive their demand side. So as we get further down the line, we're getting more bearish. I think we'll get maybe 15% higher than we are today. This is a cautious outlook. As a smaller owner, we have to be slightly more cautious. But I think it will be driven largely by the Capes.
Yeah, thank you. So apparently I realized that all the panel speakers, they are not from public stock-listed companies, right? So that's why they dare to say bearish. So, all right. So I think as Numair mentioned, that definitely Capesize is the main driving forces of among all the dry bulk segments. So where on the other hand, Capesize spot rates at the moment is $35,000 per day. So even we look at the FFA curves for the rest of 2024, it's still super strong. It's average almost 30K for the rest of 2024. So that's, of course, paper is paper. And how long this level will be maintained is indeed very difficult to predict at the moment. Volatilities, as Michael mentioned, is definitely part of the shipping blood already nowadays. We cannot avoid any volatilities overnight even sometimes. So, on the other hand, if we look at the supply side, I think it's also we are facing something very particular at the moment, because from the major dry bulk building capacities, we can say today, like in Japan, in China, Japan is full of order book up to 2028 now. And China also up to 2027. So it's a kind of scene that we almost never seen in the past, even during the market peak time of year 2007, 2008. Even that time, we didn't say order book filling up even up to 3-4 years in a row. So that's something I think that some people said again, and we heard such similar voices, that due to inflation or due to regulations, whatever, so the price will be very difficult to come down on new building price. So that's how that we heard from our Japanese yacht friends that people are now even talking back to the conventional design vessels, because even conventional design vessels, they are getting very precious. I mean, talking about new building slots. So and the price is getting very high. In Japan, for example, we take Kamsamax, for instance. So in Japanese yards now, we are talking about $43 million, even basis end of 27, 28 delivery. And in China, it's also very much high 30s. So it's a kind of level we have very, very hardly seen in the past years. So how you think that this can be maintained for the coming months at least? So maybe new building price is difficult to come off because yards also very much relaxed. So they are very much not in a hurry. On the other hand, I mean, the steel plates pricing is getting up and up in Japan, in China as well. So how you think this trend will go on? So
it's a good question, of course, but I don't see, as you say, I don't see the new building prices coming down, and you can see that the resale prices are even higher than the new building prices. And this is, of course, not only built on expectation for 2024. This, of course, for the many years to come. And again, based on yard capacity and the demographics of the existing fleet, and not least the new regulations that we also just heard upon in the previous presentation. So if you have a yard and your next available slot is 2028, I don't really see any reason to lower your prices at the moment.
Well, I would tend to agree with you, of course, because like you mentioned, there is no capacity. So everybody is full, so nobody is going to reduce prices at all. But I do have a slightly different take on this as well, because I have been talking to a lot of people, a lot of people who are ordering new buildings as well. So why are you ordering? What are you ordering? What exactly are you ordering? Because we have a view at Lila Global that the technology is not ready. So to 2030 we have to achieve certain goals. In 2026 also we have something, and then 2050, of course, we all know the big target. So people who are ordering these vessels, I'm sure they have a plan. But what we are doing at Lila Global is we are actually running the older vessels. We are trying to. So I would rather see investment in technology which actually captures carbon credit and tries to restrict them going into the weather environment. So it's very important, therefore, to take a step back. The prices are not coming down. Short answer is because there's no availability at all. There are people still ordering because everybody wants to get better than the other. Because if you have a newer vessel, then your speed consumption is better. Therefore, you're slightly better than people with older vessel, and you will eventually get preference. So I understand that logic. But if you do not have an alternate fuel, you're ordering something which is going to run for 20, 25 years. I would like to know what exactly is the thinking behind this. I would rather have an investment in a carbon capture technology, put it on our older vessel, run it for a while till the time you find new technology. I've still not understood this. In fact, today, before coming, I told a colleague of mine, can you do a quick chat GPT? Is a newer generation tool. So what exactly, where should I invest in shipping? It says actually invest in technology and not in ships. Maybe they also know it's high right now. But that's, I think, what my take. Yes, prices are not coming down in a hurry for new building. But I hope people are not buying for asset play.
Thank you.
Sorry, not much to add on what these guys have already said, because it's quite clear that prices will stay elevated for a while. But if you'd focus on two other aspects of this question, is that most of the slots that have been taken up are from the bigger vessels, containers, not in the dry bulk space. So that's very positive for dry bulk. We have, as we know, the supply side is very, very positive. That is the real story. Where demand, where it might be, it doesn't really matter because supply is so strong and so low. And another important thing to note, I was reading yesterday, is that by 2026, I think 40% of the dry bulk fleet will be older than 15 years. Which is a great position to be in. How are we going to replace all these vessels that are getting older? There's no slots, they're too expensive. And we need to keep on renewing the fleet, so you can have an even better position going forward if you look further across the horizon to 26 to 2030. We're in a very, very sound position from the supply side, and that's the basis from which you can build from the demand side. So,
yeah, thank you, Numair. That's a very, very intelligent debate on that. That's why people nowadays very difficult to find the correct crystal ball to make the right decision now. So due to the far delivery position on new building and a very high price level, that's how makes the second-hand market is also super hot. So we have seen last night, this morning we heard this also one of the long-established Japanese owner, Sanko, who closed door by selling their last ship. It's just 3 years old, this Sanko Hawking. So we heard it's almost committed at $42 million. So it's sorry, it's one of the highest on the second-hand price. But again, since the vessel is eco-designed, as Numair also mentioned, in a couple of years' time, we will say the dry bulk fleet is getting aged. So quite a few people feel that. So it's still good time to invest on eco-design, whatever is new build, because new build is far, but on the eco-design existing second-hand vessels. So overall, I mean, of course, you have your own view on a bearish or bullish point. But how you think today, you would be on the buyer or selling side or wait and see side? How you think nowadays?
Well, we don't have any dry bulk vessels, but I would be tempted to take the 42 and run. No, exactly. No, I believe that there's a lot of good opportunities out there still on new buildings on a charter perspective. I agree very much with Nitin, and when you say you shouldn't buy it for asset play at the moment because it is a little bit inflated. And again, the only thing we have to really relate to is the supply side. And if you look at what happened in the world over the last years, from everything from COVID to Panama canals to Suez and this, and they say, okay, this will all be over in 6 months' time, and the water will be back in the Panama Canal, and we'll have a ceasefire in the Middle East. It's all good, but I'm not that optimistic. I mean, yes, maybe the water will come back in the Panama Canal, but there will be a lot of disruption, as I again said. The disruptive weather will continue, and it will cause not only more typhoons, but also drought and other issues. So it will be a very, very difficult world to maneuver in. And I think it's going to be creating even more congestions. It's going to create these massive spikes that you suddenly see, which has nothing to do with the macroeconomics and these things. So I'm still standing by my point in the beginning. I'm quite optimistic, and also, as said, the fleet is aging. But again, 42 million, I might sell.
Well, I think this is literally $few million question today. As you know, in Lila Global, we are a group company. Our group company is GMS. GMS is the biggest buyer of floating assets. So we are very active on the buying and selling side as well. And I can tell you that daily, every day in the morning, with 3 or 4 of us sit down and say, what should we do now, and should we keep going, or should we take position, at least book some profit. But having been in shipping for about 10 years, I remember when I joined my previous company, we ordered something for, let's say, 25 million, and we got offer of 30 million, and we said, you know what, we're not going to sell, it's going to go up, because market fundamentals are strong, there is supply side problems, whatever we are hearing today. And I think 6 months later, we could not get a buyer for 16 million. Well, I'm not saying it's going to happen again. I hope not. But all I can say in conclusion is at a right level, we are always a buyer. And right level is defined by the market always, and the fundamentals and what the future has, what you can see. And at the right price, we are always sellers as well. So if you want to buy, we can talk later. Okay, thank you.
Sell, don't buy. If you look at the market today, I mean, what you can buy today is extremely expensive, but what can you fix it at is not nowhere near the levels you could fix it at 2022. We bought handy maxes in 2022 at around, I think it was 24 million. You could fix them for a year at around 28,000. The same year, the same handy max you can buy today at 24 million, you can fix at 13,000. Entry point is so important. It really absolves you of most of your sins if you have a very low entry point. The freight market is not supporting the asset prices today, especially on the geared size and even the Kamsamaxes. Capes is obviously very expensive, but also earning very well. But if I'm a seller of a Cape, I keep on raising my value every day, every other day. Like you mentioned, the Kamsamax. So it's very difficult to find. If you can find opportunities to buy at good levels and fix at good levels, and that's a very good, healthy market to be existing in.
Yeah, thank you very much for the input. Honestly, from my side, I also feel that it's 42 is really super high. Of course, the historical lowest that I remember from my memory was back to 2016, so it's just 8 years ago. Of course, it's quite different market at the time. But 10 years old, the Japanese Panamax was sold for 6 million. That was also the record at the time. So yeah, sorry, Nitin, you want to say something?
No,
So
2016 February. You're talking about 2016 February. That was a 30-year low. Yeah. Yes, of course. But like Numair mentioned, you want to sell a Cape today, or you don't want to sell also. You keep getting calls. Every day you're increasing the price. Everybody's trying to match it. But 2016, that's a great example. 30-year low. What happened after that, before that, nobody remembers. So it's very important when you're doing asset play, or you're buying something for 42 million. Numair actually said a very good point, that what can you fix at? Can you recover some of that money today? You know, can you put some money in your pocket and wait for the market to fall? Market will fall. This is a cyclical business. Let's not forget that. I hope bankers don't forget that either. They don't keep increasing their LTVs and inflate the market like no tomorrow. Because if banks keep funding, then chances are the market will stay what it is. And then when the freight market stops at 24 million and 13,000 market, it doesn't make sense. So I hope better sense prevails and we all land safely.
It's funny you mentioned 2016. That's when I joined the family business, and my father was buying Supermaxes at, I believe it was between 6-7 million, and they were at the time, I think, between 4 and 7 years old. And I was really confused what's going on, because the market was freight was about, I think it was averaging between $6,000 to $7,000 a day. Obviously, he had the foresight, he had the experience to understand where the market would go. But that's exactly what it is. You can buy low but fix low, but if you're buying high and fixing low, then you're really compounding your issues.
Yeah, that's good point. And again, some people debate that we may never go back to 2016. Not because of in theory, but again, that moment, we never faced the situation, the world that we are facing today, geopolitically, all the potential unexpected ongoing disruptions, but also all the regulations that we have never seen back that time. That time, we were not talking about that much difference on eco design, non-eco, dual fuel, all these kind of regulations.
I'll be honest with you. I think it's common knowledge that I used to work for Numair's father in 2016, and 2013 I joined as a banker, and I joined him. And 2016 I practically was begging him not to buy anything, and 2018 I was asking, why didn't you buy more? So it's one of those things where we need to be extremely careful and not say things that because 30, and when he told me, because he's a very experienced man, in fact, he taught me whatever I know about dry bulk today. So he told me in 2016, he said, Nitin, this is 30-year low. I saw this market 30 years ago in 86. So will it happen again? I can assure you it will. When is the only question. So are you prepared for that is something that you need to be careful about.
I fully agree. Saying that we'll never see the heights of 2007 or 2021, 22, or we'll never see the lows. We will, absolutely. I fully agree, and especially today, because we have the situation with the derivative market, which is actually almost driving everybody. Whenever you ask someone what's the market doing, they turn their head and look at the screen, and it's 3 times the size of the physical market, and it's growing faster. So it's I wouldn't say it's a toxic situation, but it's a new situation, and it will drive us both high and low.
Thank you so much. That's from our side, also from Erasmus. Honestly, it's very mixed signals. So it's very difficult to make a decision. That's why we are keeping dry bulk aside a bit. We are doing more other things on the container feeders and gas carrier at the moment. So pretty similar situation. So Kevin, I'm sorry, we're running just exactly the time now.
No, we're good. We have time for 1 or 2 questions, if there are any, please, from the floor. Maybe not. Just let me ask you a question. I mean, normally there's some kind of sort of correlation, isn't there, between high values and high freight rate. You were saying that there's no real correlation at the moment, and we know why. But who are these buyers? I mean, who's actually buying at the moment? Who are these people who are taking this crazy decision to buy $42 million vessels?
In any market, there's buyers and sellers, right? So everyone has their own plan. Like with new building, if you need a replacement strategy, then will it go higher? Maybe go higher, maybe go lower, but you have a plan, you have a 5-7 year, strategy. But if you ask
do you think these guys have, they expect to make a good return on their investment?
Yeah, you never know. They might have contracts, they might have COAs, they might have their own trades that they need the vessels for. They can make their the finance work for them. So it really depends.
Just to add on, I think it's very, very seldom that you see the exact correlation that you go out and buy an asset, and then you can flip it out, and then you can make a whatever percentage return on that investment, because then the seller would do it themselves, and they would increase the price. So it's always a little bit on expectations, and as we heard, and we can read everybody's. We discussed a little bit about 2024, but 25, 26, 27. What's going to happen there?
I mean, if you feel like Michael that it's going to go by 40%, then I'm a buyer, right? But if I'm feeling more cautious, I mean, it just depends on your viewpoint, really.
But I'm looking for those buyers also myself.
Kevin, if I may say that, we look at the ship as well, actually. But honestly, if the price is like 37 level, we may jump on as well. But because comparing with 5-year long-term charter, that we can make the things makes better sense. But 42 makes very big disconnection with the price and the earnings. So, but again, the correlation is more for such a young, 3 years old Japanese ship. So the price is very much correlated to the new building price almost. So
absolutely, I would rather sell than buy at 42.
A final question? Yes, sir.
This is mainly a question for Michael. I just wanted to ask, if we're saying that asset prices are very high and the freight rates aren't really there to support, then on the operating side, are operators more interested that, okay, we should lock in low levels of 1, 2, 3, 4, 5-year charters and kind of do almost like an asset play in that sense? Or is that not really on your mind at the moment?
I mean, most charterers are looking at both. I mean, we always have a selling price and a buying price. So we look at taking new buildings with 25, 26, 27 delivery. If we have anything, I mean, for us, it's always a question of you're running your book, and we can be optimistic, we can be cautious, we can be pessimistic. But if you don't remember to bank some of your profit once in a while, you'll end up in a situation where suddenly the market wasn't there where you thought it, and you'll be back at 16 million or 6 million or something like that. I mean, the only thing you learn after a long life in shipping, I believe, is that it doesn't always go the way you thought it would and expected. So you need to secure a certain income, and then you can play around and take your bets. But it's always a bet. And again, as I said, with the derivative market, it's everybody's. Whenever you do something, everybody's evaluating everything up against the forward curve, which is basically the only hedging tool you have today, as there are very, very few physical contracts running for 5-10 years today.
Okay.
Can I ask a question?
Yeah, please.
To you, Michael, would you take a vessel today at a 1 year or 2 year charter, time charter, a geared vessel?
Not at 1 year, no, I would not. It depends on the optionality I get.
Okay. I thought you're being aggressive right now, 30.
Yeah, but I mean, I said that we could see a spike of 30%. But I'm also know that the price I'm going to get, if I'm looking at an Ultramax at $19,000 a day delivery in Far East, I mean, I have to trade that one around the 21 to just make a little bit of a return. And there you can see, yeah, even though we're going to get a spike, because I also agree very much that when we see, and it's a question of when we see the Panama Canal being back. And I agree, Suez Canal we can't really see, but there's quite a lot of traffic going through Suez Canal still. We will see a correction in the market, but then after that there will be other corrective measures as well, and that's why I'm saying I'm quite bullish both on the long run, and we'll see these spikes this year as well, and that's why I think we'll see a spike which is $10,000 above what we have today.
Would you give your vessel today at 1 year?
You need 1.25 or?
It's an interesting one because, I mean, we have a sizable fleet now, 25 ships. We have been discussing internally that maybe over the next 2 months we would take some coverage on a third of those ships, maybe a quarter, because we need to protect and hedge our fleet. So I've been looking at my Handymaxes, which I don't have so much confidence in their spot earnings for the rest of the year. Ultramaxes, which I know the market values more anyway. If I can get a good A1 charter who would take it for a year, I think I would seriously consider it.
Don't forget my brokerage, guys. Thank you.
Excellent. Thank you very much, John and panel. Thank you. Thank you.
Thank you very much. Yes.